Nowadays, I cannot open YouTube without someone telling me how should I manage my money, including this channel. You would think that a lot of poor financial decision making is due to lack of knowledge, but an equally big cause is that you may be operating on wrong advice. Through this video, I want to show you that even seemingly well-meaning advice may not be good for everyone. Does it sound scary and makes you question everything? Well, I want you to question everything when it comes to your finances. With most of the advice available online, you will see some semblance of truth in them. But when you dig deeper, you may notice that they don't apply to your case at all. So let's jump in. But before we jump in, let me tell you this is a new channel and I really appreciate all your support. So if you have not subscribed yet, do click the subscribe button and press the bell icon. Let's jump in now. The first one is home related. Actually, first three are home related. So number one, people say, think of your home as an investment or that buying a property will give you financial security. Now there is so much pressure on buying a property, especially from our parents, as if it's the one thing that will make us financially successful. And that's simply not true. If you start believing that the 50 lakh rupees home in which you are living in is part of your investment portfolio, boy, you are in for a shock. Will this home produce cash flow for you? You are living in it, so you cannot rent it out. And you obviously cannot sell it either. If you buy a house and put it up for rent or set up an Airbnb, now that would be an investment. But the house in which you live is not. Simply put, if the house is not producing cash flow for you, you should not count it in your investment. Number two, renting is a waste of money. If you take a home loan too early in your career when you are not ready, you will get saddled with a loan that will be paying for a quarter of your life at least. The thing that was meant to give you financial security and stability will become your chain. All your life decisions will revolve around the need to afford your mortgage. But renting enables you to be more mobile. You are young, you will switch jobs, you will change cities. You can take that significant pay rise and move across the country without having the need to think about selling your house. In this real estate market, you won't believe how difficult it is to sell a lived-in property at a price that you are actually happy with. Also, if you rent, you don't have to worry about property taxes and having extra cash for the repairs. Don't get me wrong, I'm not against buying a house. It's just that it should happen when you are mentally and financially ready for it. Till then, renting is advisable. Number three, pay off your mortgage as quickly as possible. Now, if you have bought a house, this makes sense if you are in your 50s and 60s. You are nearing retirement and you don't want to keep a loan when you don't have a monthly salary coming in at the same rate. Agreed. But when you are in your 20s and 30s, each rupee that you can invest is very powerful. You may be paying around 8% on your home loan, but your money can get around 10 to 12% if you invest that money in stock market or index funds or mutual funds. This extra 2 to 4% can change your life if invested for a long period of time. If you are 20 years old, your 100 rupees can turn into 4,500 rupees by the time you turn 60. If you are in your 30s, it can turn into 1,750. And if you are 40 years old, your 100 rupees can turn into 670 rupees by the time you turn 60. You see the big difference? The key is you need to start investing early. If you focus all your strengths in paying off your loan, you do not give enough time to your money to compound. And time is the most important factor that will grow your money. Again, don't get me wrong. I want you to pay off your high interest loans first. But for loans where the interest rate is lower than the typical market returns, I want you to give priority to investing. Does this video make sense to you? Hit the like button so that the YouTube algorithm knows. Number four, buy insurance so that you can get some good return on your money. This one is my favorite. There are so many ways that bank executives and insurance agents try to dupe you with their sales pitch. The information they give is factual, but not always in your best interest. Like, don't buy term insurance, you won't get anything in return. This pitch will find many takers because it seems logical to think that why should you invest when you're not getting anything in return, right? But see, insurance is a tool for protection. You should not mix insurance with investments. With term insurance, you could get a cover of around 1 crore by paying only 10,000 rupees. And no other insurance product will give you such a large cover at such a small price. What about money back insurance policies? Some policies will offer your money back. But that's still not a good enough reason to buy traditional policies. The return with these policies is sometimes as low as what your savings account will give. The front loading of commission is so high that in some cases it may take you 5 years just to recover this amount. So the essence is, do not mix insurance with investment. The only two insurance products that I would recommend are the term life insurance and the health insurance. Number 5. Retire in your 20s and 30s to live the life you want. Have you heard about the FIRE movement? It means financial independence, retire early. Now this approach is gaining some grounds, but it is not for everybody. Being financially free and retiring early is of course appealing, but getting there is not all sunshine and rainbows. FIRE needs you to maximize your savings to an extreme level, which changes your day-to-day life. You need to cut all your unnecessary expense and reduce your cost of necessities. In the FIRE community, investing 20% is for rookies. They go as high as investing 80% of their income. Now this is not for everybody, especially when you have responsibilities and family to take care of. Your retirement planning depends on many decisions and assumptions that may not hold true for long. The stock market, the housing market, the inflation, the interest rates all rise and fall. If you retire in your 30s, you'll be fearful of any minor drop in your investment returns. This minor drop can be the difference between whether your funds last all your life or not, whether you stay in retirement or have to go back to employment. A major illness or an unplanned child could alter even the best laid plans for your financial independence. And number 6. All cookie cutter advices like FD is bad, or crypto is the future, or 20s is for aggressive risk taking. Well, if a product is not good for you, does not mean it's not good for anybody else. FD may not be the best product for you when you are in your 20s and 30s, but as you are nearing retirement, capital preservation becomes more important than growth. And a lot of older people are not comfortable with taking the risk on bonds and mutual funds. For them, FD is one of the most secure option as a fixed income investment. Crypto is the future, but that does not mean that the Web2 companies will stop existing abruptly. You will see the transition coming, so you need not worry right now. 20s are for aggressive risk taking, but that may not be the case for everyone. If you have family responsibilities and your financial goal is just around the corner, or if you have anxiety issues and you cannot see your portfolio value going down, in such offbeat cases, you need to be aware about how much risk you are taking. There is a lot of bad financial advice out there, masquerading as good advice. Your first objective should be to educate yourself about personal finance so that you can yourself decide what is best for you. The more you know about money and the assets you have invested in, the better you can plan. I hope you now understand that even a good money advice out there may not apply to your specific case. Did you like this video? Click the like button so that YouTube knows. Hit subscribe and press the bell icon. Wrapping it up, this is Paritosh signing off.